What is a full-time trader, guys? Doesn't have to work outside of that source. So using trading as a full-time income and doesn't have to work outside of trading to derive that income. That's a perfect example, isn't it? Often people say to me, I go, what's a full-time trader? And they go, somebody trading full-time. But the time bit is the bit in that question, isn't it? What is a full-time trader? But really a full-time trader is just somebody who derives their income from the market.
Positive, especially this weekend of the Art of Trading. Really concreted and solidly made me feel like I have made the right decision, and has made me very excited about the future. Because I had no experience in the trade market, I still didn't know whether they were just another black suit trying to take my money, until this weekend concretely confirmed everything. And it was so amazing to see that they really are a family and they really are a tight-knit community.
My experience was very rewarding. The staff, I think, are so dedicated that it's a great atmosphere that you want to be around.
And we were talking about that risk and reward and how important that is, and what's my whole strategy for risk management, and if I'm having different portfolios, is my risk management strategy going to be different?
John Gow was unemployed when he started investing in shares through Wealth Within, a guide to help do-it-yourself investors make some smart decisions.
With trading, it's not about being in the market all the time. It's about just being in the market when it's the right time, because the share market, you can just trade with your laptop. I'm not being told what I can and can't do by a boss.
What your goal is what you can see in the future, isn't it? Yeah? Right now you don't know what you don't know, do you? And it's like sailing a boat. If you go out sailing the boat, you can see the horizon, but then when you get there, you see another horizon. So as you're walking the journey from where you are to where you want to be, the more you can see and the more you can perceive that you can do and the more you can perceive that you can achieve, yeah?
Joining us this morning on Studio 10 is financial expert Dale Gillham. Hi, Dale. Hello. Finance expert Dale Gillham from Wealth Within. It's nice to see you again.
It's amazing listening to a professional trader who's doing what you're aspiring to do and hearing it firsthand.
Too many people ring me up and say, hey Dale, I want to make quick money, but it's not about getting rich quick. I think we can go for about 4 hours, but I'm not sure my wife would like that. So
I'd say congratulations for putting your time and effort out there, because you probably don't really have to do it. You're successful traders in your own right.
Thank you very much for opening up my mind with trading.
So of course you can succeed, of course you can. And you're the only one holding yourself back or succeeding. And that feels very empowering, actually.
A quick reminder before the show starts that this live stream is an educational tool, and as such your personal circumstances have not been considered. We hope you enjoyed this week's show.
Good evening and welcome to Wealth Within Live, the Australian stock market show where you get to ask the questions and we give you the answers about all things investing and trading. Now tonight we're going to share with you our thoughts on just how you can get far better returns on the market, but by not doing what everyone else does. As always, we'll be looking at what's happening on the stock market, give you our thoughts and where it's going and where it's headed and where it's been, answer your most burning questions, look at the stocks you're interested in and give you our expert opinion and a whole lot more. Hello, I'm Dale Gillham, the Chief Analyst here at Wealth Within. And joining me tonight is the super sensational Janine Cox, our Senior Analyst. And we're Australia's most trusted stock market educators.
Hi Dale, how are you this evening?
I'm good.
You're on fire tonight?
Well, put me out if I'm on fire, no.
Actually, can I bring a bucket of water on the stage?
I thought you were going to bring one of those squirt pistols.
No, I was just going to say that you're so hot, you know, that you've got smoke coming out of your ears.
Is that what it is? Oh, no, it's fine. It's cold in Melbourne at the moment, so it's probably not. I'm probably not too hot, but I know I wouldn't put it past Janine, guys, for her to bring a little water pistol on and start squirting me on the show.
Summer's coming up.
It very, very much is. Now, the market was interesting today. I know it was interesting. I had somebody on our YouTube channel tell me the market was crashing today, and I had to laugh.
That's exciting.
Yes. The market's down 2% for today, guys, and the market's crashing. That's interesting. So we'll talk a bit about that, and I think probably tonight's a good night to talk about that, isn't it?
But look, you can't blame them for thinking that, though, with everything that goes on in the media.
Yes, I can. It's just not smart.
Okay.
Like, one day
Be
doesn't
very
make
direct.
one day doesn't make a sheep station, and
No,
markets
true.
don't crash in a day.
We know that.
Well, you don't have to be Einstein to figure that out either.
No, true.
So, to
See,
me,
I told you it was on fire tonight. Now, if you have a burning question for us, on the right of the screen is a chat box, so put your questions there. Also, a big hi to anyone new to the show. Great to have you with us tonight. Now, moving on, it is the last Tuesday of the month, and
That's
that
the
means...
first Tuesday of the month. Sorry, I forgot to change the script.
Okay, we could repeat last week. And that means that we take a look. I thought it was going to blame me then because I read it.
That's my fault. Sorry, I'll take the blame. Spank me later.
And because it's the first Tuesday of the month, we're going to look at the All Ordinaries Index and also what occurred today, as it's a great time to look at the market, especially with that pullback that we've just seen. So let's get into a discussion on the market now.
Okay. So,
all right.
what are your takes? Because normally they hear me on a Monday all the time. So,
well, look, I mean, I guess for me, I'm still so excited about the fact that our market went through the all-time high that occurred in the GFC. As you can see on the screen there, this high back here is what happened just before everyone knew that the market was falling into oblivion. That was November 2007. And because we've traded above that, to me, that's a really great sign that the market's more likely to keep going. And it's true that when a stock or market trades through its all-time high, quite often you can see it has a bit of a pause, has a bit of a breather, and that's really what we've seen over the past few months with the market trading down a little bit sideways. But then November, well, look at the month, November 2007, and then we've got November 2019. It's just broken through again.
12 years.
Yeah, it's such a long time, isn't it? It's taken for the market to get to a new all-time high, and it's never occurred like that before. We've never seen it take so long.
Normally the time to a new all-time high is 2 or 3 years, and I can't remember, I mean, I did have the statistics
3 to 9 years. 9 years was the outlier.
Yeah.
Yeah, and this has broken that record, this recent run from the 2009
low. I don't know how the market's
low.
overheated. That's really where people saying the market's overheated, but if it's only just made a new all-time high. But I know a few months back when it made that high in July, I know I had people emailing me saying, hey Dale, the All Ords has made a double top, and I went, has it?
Yeah.
And it's like, seriously, it hasn't, mate. And you get that every now and again, somebody quoting some sort of technical analysis thing without a lot of understanding of exactly what it actually is.
Well, we can talk about potential double tops, but we don't know that there's any double top there until after it actually starts to fall away anyway.
No. So right now, what are your thoughts? Because they hear mine all the time.
My thoughts are that it's still bullish. While the market's still telling us it's going up, then that's the view that you need to take. You don't go contrary to the market until it starts to actually show some sign that it may be reversing.
Can we have a look at the daily chart? Because I want to have, actually, before you do that, I want to say, have a good look at this monthly chart, because we always talk about looking at the bigger picture, because it's like, and how I'll explain it, is the bully in the play yard is the one that directs everything. And so the monthly chart's like the bully in the playground, it's
Where did that come
dominating.
from?
Oh, I don't know. I just pulled it out of somewhere and there it was, How did you find your soup? I just lifted up the thing and there it was. So to me, it's so the dominant trend, or your big trend, meaning your monthly chart, will dominate the weekly and the daily chart. So all trends will conform to the longer term trend. So when you look at this monthly chart, you're seeing the big long-term moves and the momentum of the market. So when you're seeing the market and you're seeing how that moves, you can see that the market has a distinct angle that it moves on. So let's go and have a look at the daily chart now and have a look at the shorter term picture over the last month or two.
Okay.
And have a look at that. You're getting a bit of a different picture now. And so a lot of people, that's all they see. And it was interesting when I've been with people only in the last week.
That's a good point.
I was with somebody a week or so ago, and they had their iPad, I think it was, and they were chatting about the market. And they showed me this, they got up this broker thing, and they showed me this line chart on a broker thing, and they said, well, what would you do here? And I went, well, I'd close that down and not use it. And they went, what do you mean? And they were being serious about how I would look at that chart on a broker platform and analyse it. And I said, I'll just close it down and use it because it's useless to me.
Yeah.
Because all it is the daily closes as a line chart. And that's pretty much next to useless to any analysis. So, but the brokers think it's
Actually,
great.
they have created weekly charts, believe it or not.
No, they do, but they have the
you know,
default
and
set
the
to daily.
Yeah, I know. But why do they do that?
I know, because they want people to trade more.
There
So
you
they
go.
want to get you excited about what's going on because they want to get you excited about what's happening.
So what would make people feel excited looking at this chart? I mean, really, it's
It doesn't.
not
It
exciting.
makes them feel a bit
Fearful.
nervous because it's up and down and there's some volatility. But if you look back here, look at this
So what you're
bar.
saying is it might drive some selling.
Yeah, we're down 2% today, right?
Yeah.
So let's go and look at this thing. So from this bar here to that bar here, there's 2.3%.
Yeah.
Okay, so we've done it. Here's another bar from here to here. There's 3% in a day. And I can guarantee you that tomorrow the newspapers will be talking about the markets melting down, it's doom and gloom, it's the death roll, it's the whole lot of
Look, I
rubbish.
just thought it was too many people out there selling their shares to spend money at the shops.
Well, this
shopping
could be
centres.
just the big end of town, knowing that the Dow went down last
Yeah,
night.
yeah.
Just pushing it out and saying, and then putting news out saying the market's bearish. So tomorrow, because everybody's just got home from work and they go, oh my God,
Panic.
it's me. The market's melted down and the headlines are saying we've lost millions of dollars. And then they go and start selling tomorrow, and the big end of town starts buying on that selling. So don't panic, guys. The market looks really, really good. Let's go back to the monthly chart because that annoys me, the daily chart.
Okay.
Have you got more to say?
Yeah, look, I mean, the fantastic thing about this is that when we did see these runs from 2009 up to the highs, so January 2010, another low here, August 2011 and up, we're seeing similar sort of strength off these lows here, this low here, the more recent one in December 2018. So the market does push on from those lows, and that's what I think is exciting. Even if it does come back a little bit, I'm really, Dale and I always welcome the lows because we know that we're going to see some really good opportunities, particularly stocks meeting trendline rules and all sorts of other triggers will be occurring when that happens. But right now, it looks too strong.
Yeah, it does. And we always need to, when you're trading and looking at trends, you always need to know where the ceiling and the floor is. So that you can look at the boundaries of those trends. And that's really all that happens when you get downward moves. It just shows us how strong the sellers are and how voracious the sellers are and how strong or weak the buyers are. And then the inverse is correct in the bull market when it rises. Well, how strong are the buyers or the bulls?
Well, let's see how successful those hedge funds are at trying to create a bit of a stir and push our market lower.
I don't know. They might be pretty good. But do you want to have a look at some emails now?
Why not? Have we got a good one to talk about
We've got
tonight?
27. No, we've only got
27. We'll never get through it.
We've got a couple of them
We'll be
anyway.
here all night. And then these guys won't get to ask any questions.
No, but thanks much for guys. Remember, if you want some questions, shove them on the chat. We're happy to answer.
So this was
those
an
for you.
emailed question, wasn't it?
This
going
next
to get
one
to?
will be not the warlords. That's what we're supposed to do.
Okay.
So, but the first question is from somebody, a guy called Matt, who asked, "Hi, I have a question for Dale and Janine on the podcast." I think he meant the YouTube channel, but that's okay. I've only just discovered the podcast and I've really been enjoying listening to it. I'd be interested in your analysis of APA Group. For someone who already has a position in this stock, it has been going sideways for a while. Do you think it would retest resistance of around $11.75? Now, while Janine brings that up, he continues on and says, for some background, I've been accumulating a position in the stock with little education for a number of years now at an average cost base of $6.75. I'm now at a point where I want further educate myself in trading rather than a buy and hold, and was going to liquidate this stock to provide capital for education and future trading. So let's have a look at it. APA Group.
Are we talking about the same share? It's actually trading all the way down here. This is actually not the right one.
Yeah, it's not the right one.
So Dale, what?
Okay,
just
so it was
just a
APA,
moment.
wasn't it? Yeah.
We're
so
actually looking at the wrong market.
we're looking at the New York one. Sorry, guys. So APA Group. So let's bring up the right one.
Okay, so
Again,
here we
my
go.
fault. That's two mistakes. If you give me a third one, I get thrown out.
How can I kick you out? All right, here we go. Looking at the APA Group. So we've seen new all-time highs with this share. That's the interesting thing about APA. And at the moment, we are seeing some short-term weakness. It was a significant sideways move for this stock compared to other moves we've seen on. If we just look at we've seen the weekly chart for big picture, but if we just look at some of these sideways moves, it is typical for APA to do that and then fall away. So we could see a similar sort of move occur on the stock, given what happened back in 2018. Right now, if the stock doesn't start moving up next week, then we're more likely to see it pull back on the downside. So, it really depends on what rules that you've decided to use, how you're going to manage this, what sort of stop loss. A trailing stop loss is really important to have on any share that you purchase, not just the initial stop loss, because I think someone said recently that they had placed a 15% stop loss on, but then had no idea of how to set a trailing stop. They didn't understand what it was.
Oh, okay. So they set an initial.
And so didn't know how to get out, basically.
Yes.
And was thinking, okay, I'll just put my money in the market and see how the stock goes, and if it falls below what Dale says, the 15%, I'll sell it. But then having no thought for how they were going to actually manage the trade, because when we're talking about a process of being in a stock, it's that twofold process. It's that initial step, and then it's the management ongoing. So looking at this share, I would say more potential downside if it doesn't trade above this high here. So if it gets back above the week of ending 29th of November, then it's more likely to continue to rise and challenge that top again. But
which is that $11.20 or $11.50 he was talking about. So
so $11.40 or whatever there. If it goes back through that, then you're more likely to be able to stay in the stock. But if it actually starts trading back down below these lows here, then I think that we're more likely to see the downside unfold.
Cool. Well, let's go and have a look. We've got a couple more emails, but we're going to have a look at the chat first. We're going to look at a couple of stocks. So the first one we've got on the chat is from Wish Vanath, and he's looking at QBE. Now, I'll bring up his question while you're doing that. He's saying...
QUB?
QUB. He says, hello, Dale and Janine. Thanks for your time.
That's
very interesting.
That's the third one, isn't it?
Sorry?
Can I kick you off now?
No. QUB. I don't know. Is it QUB? So Cube Holding. So I was. So I didn't. Did I make a mistake?
It's okay.
Okay, I didn't make that. Anyway, let me finish the question. Anyway, so stop for a second.
QUB.
Very interesting to watch how you analyse stocks. Just wondering, have a look at QUB, please. Have some shares in it, and looking to buy more. There's a question from Ross Lane. He said, "Hi, Dale and Jen. I emailed the question to you, which was too long for this method. Hope you can get to it." I didn't get it, Ross.
Alibaba.
Was it Alibaba?
Yeah,
our
thoughts
on
Alibaba. Because Ross, I have to apologise to you, and I'm happy to do that on air.
Are you playing favourites?
I am, because I didn't call him back. So Ross, you're on the top of my list, okay?
Sorry.
And we're going to do Alibaba at some stage on the show.
Okay, not tonight.
We are.
Oh, we are? Tonight? Okay.
QUB, looking at that, I think it's really bullish, very strong, and has been for recent months. But look at the opens and closes that we've seen getting closer together. Last month I thought, okay, it's pushing out of that and we're more likely to see a move up. But this sideways move, isn't that huge? It started in February 2015 and it broke out around June 2019. So, if you were looking at the stock and you happened to pick it up around that time, then right now you'd be in a nice little profit. That's not to say that it may not come back. We can see, obviously, this week there's a bit of weakness from the market overall. But look, so far, it's still in a really nice, strong uptrend, and I still like the stock. Now, depending on what your exit rules are, so this is where there's a difference between, what I think and what your rules are. They could be two different things, because the way that I might choose to trade a stock could be different to the strategy that you've actually chosen. So trading this medium to long term can do really well on the monthly chart, managing the risk. If you look at the history of this share, it can be quite volatile, but also trend well. So, I like the share, but, it's in a nice trend. But if it starts to break the trend, then there is a short-term risk on the downside. But so far, despite this week's move down, there's no reason there for, if I was holding this stock, I wouldn't be looking to sell it right away. So that's my take on Cube Holdings.
Okay, so let's go back to the next question, which you can read out if you like.
Okay, fantastic. The next email that we have, we had to shorten quite a little, and it's from Chad. So thanks, Chad, who says, "Good afternoon, team." Oh, well, that's a lovely greeting. "I just want to thank you for all the proven strategy you guys teach to all those willing to listen. From discovering your site after researching for share trading information and teachings just makes so much more sense. For applying principles and strategies to investing, especially as I love analysing stocks, more so now. Thank you for that. Just wanted to say your show is amazing. I've started watching and have liked your channel on YouTube. You're fantastic. Thank you. We look forward to starting the diploma course, and I look forward to starting the diploma course and setting my days free of not watching the market, and by applying the principles and teachings in the diploma course, not to mention reading both of Dale's books. Wow, this guy is super keen. Now, he's talked about a stock that he wants us to have a look at, which is BOE Honeymoon, owned and bought 130,000 shares in the stock at 4.5 or 4.4 cents. Your thoughts? Chad had a couple of other stocks, however, we will not be able to talk about all of these tonight, so I apologise for that. So let's just get into looking at BOE, so we can bring that one up.
Chad had about 3 stocks, but
We've
the
already
other
got that
2,
one on there. You're super
he sent me another
efficient.
email since then after I responded to him, and he's now sold the other 2.
Oh, right.
Not that I told him to sell, it's just
Okay,
that's
he's
what
got
he decided.
rules now.
He's got.
Okay, so BOE Resources, or BOE, is it Boss Resources, I think? We're looking at a sideways move, really, in the big picture sense. So it's poised and could be poised for a rise. The troughs are getting higher. This trough here is higher than the previous one, but it could just as easily go the other way. So that's the real risk with a share like this, and it's high. It's not very liquid. Looking at the right-hand side, the weekly chart, so you can see how the bars look odd and look very different to a stock. When you compare it to a stock like BHP or Rio, you can see there's a lot of bars that are trading at the same price. That's often a telltale sign, how it trades sideways for a number of weeks at roughly the same price. And look, if it does trade above this 25th of October 2019 high there, then I'd be quite interested in seeing how it performs from there, not from the point of view that I'd be looking at it because it's too small from a liquidity point of view for us, but just to see if it does manage to break through these highs, because there's a lot of resistance around this level overhead. I'll just get the cross here and we can have a look across there. But an early sign that it's more likely to get going on the upside is when it breaks through that level there. So if it trades back below this low here, then I think the real risk is that it could then take out these lows here, even though that's really strong support, and I could say that it might come back and test that level and then go up. I think after trying to break through this level so many times, if it does break below here, what's that, 5.3 cents? I can't quite see it there.
Yeah, something like
then
that.
it's more likely to trade lower. So that's the view currently on BOE.
Yeah, I mean, he realises it's not a highly liquid stock, and the other 2 that he had were less liquid again.
Right, so that's why you chose this one out
of
the...
that's no, because he sold the other 2. That's why I chose
Okay.
this one, because he emailed me, I think.
Okay.
Did you email me this morning, Chad, or late yesterday? I actually responded to his email because his email was beautiful. It's really nice. He's very nice and polite, and he was very, as you can see as you saw on his email, he was nice and
Yes.
complimentary. So I emailed him back, and then he's emailed me saying he's sold 2 of the stocks, so that's why I chose this one. But and it was really nice, and I'm looking forward to having you as a student, Chad. I think you're going to be an excellent student, so it's going to be fantastic. And in fact, we've got a lot of emails in the last few days.
Actually, I'd like to see that down the track Chad saying that he would never buy these sort of stocks.
Well, he won't, and he already knows that, and I think that's the thing is we've had a few people over the last week or 2 realising what we're teaching, and they're sending emails saying, I realise I'm making more money by not following those lower cap stocks anymore. You know, we got one today from a lady who bought my book back in 2000, and I'll bring that email up next week because I didn't have time to put it on tonight's show. But let's get into the next email, and then we'll get back into the chat, guys. So if you've got questions, please put them into the chat. And remember, hit the like button. So do that right now while you're listening to me. Hit the like button. Now, the next email we have is from Jasleen, who asked, I've been an ardent follower of your online content. Thanks, Jasleen. I have a small query regarding eligibility for intraday stock trading in the US market. As an Australian resident, your early response would be highly appreciated, Jasleen. There's probably a couple of things in here, and it depends on day trading or intraday trading, that sort of stuff. Janine and I just tell you, don't do it. Don't even bother doing it. Because every single intraday or day trader that I've ever met doesn't really make money. Well, what they do is their hourly rate is much less than working at McDonald's. And it simply gets to that. There's a lot of work for a little bit of a return. But when you're talking about using a US or trading through the US, are you trading through like an Australian broker who has access to the US, or are you trading with the US broker in US dollars in the US? It's a whole different ballgame. Because if you're trading through an Australian broker and trading US stocks, day trading, it doesn't change anything pretty much for you, because your money's in a bank account here, and the broker organises everything for you. But if you're using a US broker that's located in the US and you've got money over there, then that's a whole different situation, and you need to go and look and talk to the broker over there and how all that works, because there's tax considerations with the US market. Obviously, you have to have a tax, what do they call it, an ITIN, which is an international tax identification number in the US for the tax laws between Aussie and overseas. And I hope that answers your question, but you would need some tax advice around all that. But if you're using an Australian broker, it's probably not going to be an issue for you, but even just chat to them. Would you want to add anything? Or
no, you've done well.
I've done well. Thank you very much. So let's go into another stock. So bring up a stock for Lendlease for Andrew, and I'll go and read up Andrew's question. Now, Andrew's asked, hey guys, purchased Lendlease in May for $13.46. I still hold, so happy with its progress. Seem to have slowed down a little in the last couple of weeks, but don't want to exit too early. Thoughts on the current price?
Okay, so he's bought here somewhere in May, and then it's shot up. So he's done really well.
Done really well.
Yeah, so let's just have a look at that run there. That's 32% gain there, so good job. Now the challenge here is to try and preserve what you've made, isn't it? So you've got to expect that there's going to be a little bit off the top for every trade. And I think that what happens with people is that they see that they've made a nice profit, and then they get a bit scared, and then they just want to jump out of it and not allow it to unfold. But all trades are going to have that period where it pulls back to give you an exit signal. So you just accept that you're not going to get in right at the bottom and you're not going to get out right at the top, but you're just going to take the safe run in the middle. And that's how we trade, is looking to get a decent part of the run. And right now, there's no reason there that I can see that I would be selling if I held this stock. And looking at it, we'd be looking to see if we can get a trend line up underneath it, but you may not be able to get one for a while. So. And that's the challenge too. When a stock accelerates away like that, often you can't get a trend line up underneath it. And if you don't have more rules, if you just read Dale's book and you haven't progressed on from that, then you'll be sitting there thinking, well, okay, I can't get a trend line up there, but how am I going to manage my risk?
But it's probably doing another trend line point, coming back to its momentum, because we do talk about stocks moving away from their momentum, going faster and slower, but they eventually come back to their longer term momentum, like we talked about with the All Ords before.
Yeah, but some stocks, not all stocks work best with an exit on a trend line.
No.
Some stocks you might be better off using other rules, and that's the other side to it, isn't it?
Oh yeah, absolutely. I totally agree with you on that one. And it really is, and it's about having a toolbox of tools to build your house or your trading and investing house. But really, stocks move up and down. They go from low to high to low, low to high to low, low to high to low. They just don't go straight up for 3 years. They just don't do that. They have to come down, and they have regular patterns on that. And right now, this just looks like it's coming down in a regular pattern. So nothing to worry about there.
So well done.
What's that? Stay calm and be British or something like that. What's that term? So it's looking.
It's over my head.
Yes, it's over my head
my
at
time,
all. So we got another email, so you can actually read this one out.
Okay, the next email is from Jack, who asked, "Hello Dale, could you please give me your thoughts on Horizon Holdings AZJ? Using the monthly chart in the past, it shows good positive trend lines. Currently, the price is on a downward trend, so I don't plan to buy yet. I think in a few weeks or months the price will continue to fall. Then if price begins to go up, I think it may be a good time to buy. Thanks, Jack." All right, have we got Horizon up? Yep.
I think so, if I get that one right, otherwise I'm out of here.
Okay, so let's have a look at the chart. We can see there it's had a stellar run from these lows down in October 2018, went through the all-time high and has actually pulled back. So remember what I was saying before, often stocks will do that when they go through an all-time high, take a bit of a breather, come back, and generally stocks will continue on. Now I think we looked at this stock either last week or a couple of weeks ago, and I talked about this gap on the weekly chart and how I believe that the stock was more likely to come back to these sorts of levels here, which with the market pulling back, you look at it and you think, is this a market-driven move or is this a stock-driven move? Now, because we could see what was unfolding on the stock, we know it's a bit of both.
We know it's a little bit of both, yeah.
And you'd expect the stock to pull back. You can't have a big stellar rise like that and not see a run on the on the downside. But you would have had all sorts of exits there. You would have had trendline exits and other exits.
We've got a few different exits there, haven't we?
To manage the risk.
Our students would have been out of that basically weeks and weeks ago before.
Unless they were trading more longer term and we're using a monthly chart as rules, that's a possibility as well.
True too. Yeah, that's true too. Depending on whether they're trading for their super fund or something else. But yeah, I agree with with you. So let's have a look at the next stock. It's from a question from Mitch. He wants Collins Foods. Mitch says, hi Dale, just wondering your thoughts on Collins Foods and where the price may be heading over the next few months.
Okay, Collins Foods, and I can't find it here, unfortunately.
I don't know what the stock code is. I can't remember. We did that a few weeks back, I think.
No, I can't find it. We'll have to come back to that. Right. So if someone can provide that, then that would be great.
If one of the traders can give us CKF
for Freddie. Here we go.
Thanks, Mr. Producer.
He's the Mr. Director.
Mr. Director, sorry. Mm-hmm. Does that mean I get sacked? Because that's my third mistake.
So CKF, looking at that, really a strong move up. We've seen lots of little breakouts along the way as it's been rising, even on the monthly chart. It does have that little bit of element of illiquidity about it. But right now, if you're holding this stock, then you wouldn't be selling. There's no reason to get out of it right now. If it trades back above this high, then it's sort of like breathing a sigh of relief. There's no decision that needs to be made. But I know that with some people, if it goes to a new high, then they think it's time to sell it.
Correct.
But that to us is just totally flawed in terms of the way of thinking.
It's flawed thinking. It's like we keep talking about, just stay with stuff while it's going up and get out when it starts to go down. But that's the challenge that people have. They don't know when it's going down.
That's right. I mean, but you could still sell with rules and it then turns around and goes back up. But it's just about managing your risk really and then making good decisions rather than just guessing.
Yeah, and it's how do I say it? It's like the three bears, Mama Bear, Papa Bear and Baby Bear. You want something that you want your exit to be just right. But most people either exit too early or exit too late, and they either exit too late or exit too early. They enter too early or enter too late. Okay. So whereas you just want that nice just right, and most people don't understand how to do that because they fear losing their profit. Yep. So they'll sell out too early.
Okay. So do you think that's what's happened here with the pullback that we've seen on the stock in
I think it looks really nice.
November?
I just think it really
Short-term
nice.
profit takers have come in.
Just short-term profit takers, and that's really all I think that is. It's just coming back to its momentum a little bit because you saw all the way through here, it's quite bullish. It's very, very bullish, whereas this angle's not quite as bullish through here. So I just think it's coming back and having a bit of a breather. You're going to run a marathon. You're going to slow down towards the end, aren't you? Well, I am. I don't know about you, but I am. But that's really all it's about. So that's, so we're going to get on to a couple more stocks. We've got Michael for CPU. That's a good pick, that, Michael. But I'll find Michael's question there. Where are you, Michael? Michael, here we go. Hey guys, hope you're well. Yes, we are, Michael. Thanks for asking, matey. Just bought CPU today for short term. What do you call short term? And what are your thoughts on the stock? Wow, what do we call short term? You want to answer that?
Up to 3 months generally is a general rule of thumb, isn't it? So it could be a number of weeks to around 3 months. Now looking at CPU, short term, it looks great. Medium term, it's starting to look really nice as well. And all we need to see is a move back above this high here in December, and then it's more likely to keep challenging right up towards $19 something if it does that. So you can see here it's taken a big move out of that low, November 2019. That was a really strong move, indicating that it's more likely to continue to rise. I think it's bullish overall.
Yeah, it looks really, really good to me. I think it's just trending along nicely, and I think for the short, medium term, it's more bullish. So how far it's going to go?
If we do see a couple of weeks down, then that's not the end of CPU, I don't think.
No, and I think if the market's bullish, CPU is a registrar for a lot of listed companies. So if the market's bullish, you think CPU is going to be bullish as well.
So, you would.
So I like the stock, matey. So good pick, really, really good pick. But I think we need now to get on to, I think it's our time for our
topic?
That's it. I couldn't remember the name. But before we do, remember, you've got to subscribe to the channel. So there's a big red button somewhere down there across to the side. So you do need to subscribe to the button, and also like the show right now. Just click the like button. So as I said, the more likes we get, the more likely Janine and I are to cover a lot more stocks. But
I think someone stopped liking it because I didn't bring my boxing gloves on the show.
Well, you did promise. You keep promising pink boxing gloves. As long as you don't wear a tutu with it, I'm fine.
Okay.
As I know with me, I put a bit of weight on mine. Won't be a tutu.
Yours won't fit now.
No, mine will be a 4-4, not a 2-2. Sorry. Okay. But it's now time for our topic for tonight's show, which last week we actually suggested in the chat we'll be talking about the issues around capital gains tax. Now, Janine sat there doing some research.
You're
and
going to have to keep talking because
But yeah, capital gains tax was really spinning ahead. But no, but we actually did cover that a few weeks ago. But as we know, selling stocks and paying tax on profits makes more money over the medium to long term. However, after last week's show, we realised that we covered this topic in July on a show called How to Increase Your Trading Profits.
Now, why haven't they all watched it already?
Well, they have.
Okay.
Well, the smart ones have.
You're going to send them back to watch it again?
No, just the new ones.
Okay.
The new people that you say hello to every week.
Okay.
Okay,
Fantastic.
so I haven't finished my bit yet, so just hang on, you'll be all right.
Right.
Okay, it's the show was increase your trading profits by 30% or more. So we did it in July. So go back if you want to have a look at that capital gains tax stuff. So if you haven't watched it, we encourage you to do so. But tonight we're going to talk about one of the biggest reasons why investors and traders get poor returns consistently, which is referred to as herd mentality.
Now, Dale, you could say that paying tax and herd mentality are linked, as so often we hear that catch cry from investors saying they are not selling as they have to pay tax. Oh, they're just a stick in the mud, aren't they, really?
Oh, yeah,
which in itself is following the herd.
And I agree. It's interesting that people think that paying tax is a cost and so will avoid selling a stock that's falling away to avoid the cost, but not selling ends up costing them far more. You're paying tax because you've made money, and I'm quite happy to go to the tax man with a big bunch of flowers, a bottle of vodka, shake his hand and say thanks very much and take him out for dinner. Because they're allowing us to make far more money the way our tax system is. And we do have a great tax system here where we get to negatively give and receive franking credits. So I really can't understand people why just pay your tax, because that means you're making more money. And these are enormous benefits for both investors and traders. So we do have a good system here. So let's get into chatting about herd mentality.
Now, you do not have to be Einstein to know that many investors react to market conditions. In fact, you only need to watch this YouTube channel and the live show for a few weeks and you'll see this come up in some of the questions and comments that we get from individuals. Now, investors seem to stampede up the bullish mountain when the market's rising and ride down that slippery slide just as fast when the market is falling. Now, unfortunately, this herd mentality behaviour is proliferated by the daily market reviews and sentiments expressed in the media, with headlines such as "Market Meltdown, All Odds Losers, X billion dollars on a dark day in the market." Now, just read tomorrow's paper and you'll see exactly what we mean. And I've seen situations where they'll come out and they'll say that, and then the exact opposite said a few days later.
Oh yeah, they'll go trillions off the market today, and then the next day trillions made on the market. And as you saw on the daily chart of the All Odds we looked at before, we've had 2% drops 3 times in the last month or two.
And you want the market to come back so that you can get the next rise. That's all part of it. Otherwise, if the market just keeps going up on what's called a wall of worry, eventually it's just going to tip over like that, rather than being a sustained rise where it just keeps rising. Yeah,
I often said markets don't crash at the top, they crash at the bottom. And you get more of the biggest falls after the market's already falling, not at the top, and we're at the top at the moment. Well, we're not even at the top at the moment. So, but if people are making the wrong choices because of herd mentality, we need to explore what it is that drives us to follow the herd, particularly in the stock market. Now, following the herd is great when crossing a busy street or trying to get out of the football stadium, and it can also be useful when faced with a life and death situation such as being caught in a fire or flood. So herd mentality can give us a sense of safety in some situations, but what about the stock market?
Commonly, investors will follow the herd to avoid the possibility of feeling remorse in the event that their decisions prove to be incorrect. Does that sound familiar? And here they feel safe as everyone is doing it, so it must be okay. After all, we've all heard the saying that there is safety in numbers. Whilst I agree with that, when walking down a dark street, as the more people the better, it's not necessarily the case with the market.
Now, this brings us to the next reason why people follow the herd, and this is because people feel that herding reduces the time required to properly analyse an investment decision. Now, this false assumption is based on the belief that if everyone else is buying, someone else must have already done the required analysis. Think Bitcoin. Now, I'm sure you've all seen the TV cop shows where the policeman asks the person why they did something, and they give some excuse that someone else was doing it. Sorry, officer, that person was stealing the TV, so I thought I would get in there and do that as well. So sorry, officer, but that's really what it was going on about. And we've all seen those TV shows. That person was speeding, so I thought it was okay. Or, yeah, I was using my mobile phone, we're driving, but everybody else does, it's okay. But it's not okay, is it?
No. and you'll do your dough on the market if you think that way.
Now in Sydney, there are cameras on those for the phones. Don't use your phone in Sydney.
Right.
Mm.
Okay, the reality is that many investors would rather purchase a stock that others are also buying in order to seek comfort in the knowledge that they are not alone in their decision making. Now, what we mean by that is that if people are talking about the stock, they'll go and buy it. It's not like, okay, the money, what we talk about is if money's behind the stock and it's rising, then it's okay to get into it. That's the difference, really.
And how many
isn't
times have you spoken to somebody who said, when you go, why did you buy the stock? And they go, oh, everybody at work's talking about it. Or I heard it on a chat forum and everybody's talking about it. And then it tanks and everybody loses money.
Yep. It also enables investors to rationalise a stock that starts to go down. Since everyone else thought so highly of it, it makes sense that they did too. In essence, they have given themselves permission to blame someone else for losing. So the reality is that no matter how you made the decision to buy or sell a stock, you are 100% responsible for that decision. So saying that you only bought a stock because a broker recommended or you got the tip from a forum is not good enough. It's your money and your choice.
Now, we've just experienced Black Friday, and this is a huge example of herd mentality that results in many overspending. You know, you only have to watch my market report for the US today that went out today with Jim Beach. Last week he said he'd done all his Christmas shopping and he wasn't spending any more. Black Friday got him into the shops and he spent more. So even a financial expert like Jim has gone out and spent more. But for example, the sign, you know, we see signs on the door or signs on an ad or you know, print or media, wherever it is, it says, you know, 70% off. And that pulls people into the store as they perceive that they'll get a bargain because it says 70%. But yet when you get into the store, your mind is saying that everything is 70%. So you're thinking, well, everything will be 70% in the store. But you go around the store and you struggle to find that one item that is actually 70% off. And I've done this in the past. I walk around the whole shop, go, what's 70% off? And you might find it could be a pencil, you know, or something like that that's really cheap that they're not losing much money on. But what they've got you thinking is everything's cheap in that store.
Yeah.
So, but everything else in the store might be only 20% off. And I know I've tried this before, as I said, and the mentality has investors bottom picking, and this is what's happening with the stock market, is investors bottom pick, trying to grab a bargain on stocks or buy cheap stocks that are falling. And we know what is cheap in the marketplace, and most people don't understand cheap, and we see people buying on the way down. And we've had somebody already tonight talking about averaging their price. I had an email yesterday from somebody who watches us who would dollar cost averaging.
The industry have taught you that, and it's the worst thing you can possibly do.
And that's another thing of herd mentality. People dollar cost average, don't do it. Read my book, don't dollar cost average. For those who have been watching the show, you'll know for a while our thoughts around all of this. Now, we've seen other examples of herd mentality, such as the tech boom and bust in the 2000s, Bitcoin, people trading marijuana or lithium stocks, to trading many other hot at the moment or hot for now areas. Well, some people have made money in these areas, and we're not saying they don't, but they tend to be the early adopters or the ones that have better rules around that. But many did not, as they followed the herd, and then they got burnt. And we've seen or talked to so many people that got burnt during the Bitcoin bust, didn't we?
Yeah. Now, research constantly shows us that following the herd when investing in the market gets average returns at best, and in trading, following the herd can be disastrous, as we saw in the Bitcoin bubble. We have all heard that 80% of traders lose and 10% break even. So why is that? Herd mentality. And as these people en masse do the same thing, they read the same books, visit the same websites, believe the same myths, use the same tools and techniques. So that's where it all stems from.
Well, it is. And people say to me, how do I become a good trader? And I said, don't do what everybody else does.
Yeah.
And they go, how do I do that? And I go, well, go to any shop, look at the books they're selling around trading. And
they're all daily charts.
And they're all daily charts and they're technical indicators and all that. So I said, have a look at what they teach and then don't do any of it and you'll make far more money. You've got to really carve your own path. So if 90% do not make money or break even, then it stands to reason that if you wish to be consistently successful in the market and make more money than anybody else, then you need to not follow the herd, but rather carve your own path. Now, our students are constantly telling us that we're turning their trading around very quickly by first getting them to stop making bad choices that they've been making through following what the herd does. But the first thing we do is really stop them from losing. And I remember an analogy that I mentioned is that if I used to be a lifesaver, and I used to teach kids to to swim, like really young kids to swim, in my school holidays. And the first thing we did was teach them not to drown, because if you can't teach somebody not to drown, and if you're a lifesaver going to somebody's drowning, you have to make them feel comfortable that you're going to save them, otherwise they're going to drown you.
Yeah.
So that's why the lifesaver has the surfboard or the ring or whatever else, and you can hand it to them so they feel like they're not going to drown. And then once you do that, then you can help them. So you've got to stop people from drowning first to help them. And so that's what we do. We help traders stop losing first. And then secondly, we give them lots of tools and strategies that the herd don't use, which is what I was talking about earlier. We don't do stuff that's in 99% of those books out there. But what we do teach them helps them profit more, but profit more consistently.
That's important. And in Dale's book, Accelerate Your Wealth, he talks about a study by 2 professors on how our investment choices are correlated to our personality type. And this is great reading for anyone wanting to find out more. So if you've not bought the book, I suggest you do so. If you're ready to stop following the herd and want a better way of trading that's more consistent and more profitable than what you're doing now, then give our team a call tomorrow and give yourself the best Christmas present you could ever imagine. Now, Dale, I think it's time that we get into the chat and see what other questions that we have.
You serious? I really wanted to do that more, so that's okay. Oh, my thing just... Oh, my iPad...
Siri here. Let me know if I can help.
Sorry, Siri.
Yes, we can. We need another stock for the chat.
Yes, Siri, we need another stock. Thank you. Let's go to... we've done CPU. Let's go to Peter for ARG. So I'll just shut Siri off. So
that was priceless.
I think I have to say stop saying seriously. So, so this one is from Peter, ARG.
Peter, interesting choice there. Argo Investments.
Can I ask the question?
Oh, yes, go for it.
Thank you. Hi, Dale and Jenny. It's Janine. Sorry. I bought ARG in August, showing 4% growth since, and interested in your opinion on this stock. Is it worth holding?
Looking at it right now, it's a listed investment company, and I think right now it looks good. It hasn't for a long time, so it's spent since 2014 all the way through to 2019. That's 5 years going sideways. So if that doesn't tell you how this stock is not really great in terms of a trending stock, then I don't know what will. It did have a good rise here from October 12 through to the high here in 14, so that was 2 years, but not much time in terms of the overall amount of time it's been on the market for. So it started in 2009, and so that's really 10 years, and most of the time it's either been trading down or going sideways. So look, perhaps it's now that it's going to make its move, given it's broken out of these highs, but look, it could get to around $9, maybe a little bit higher, and then we may see a pullback. So I guess, if I was holding this share, I'd want to have a nice trailing stop loss up underneath that rise and be looking to take some profits. Depending on, what your strategy is, then I would suggest that you seriously get some rules around what you're doing there with this share. On the downside, it's looking like, in terms of the volatility and how far it falls, it looks like it trades down 16% decline. So not huge on the downside, except for when it first listed. But that's often to be expected. And the GFC, when it pulled back in the GFC, you can see here, it traded all the way down in the order of the market, and you'd expect that if they've actually invested across a broad range of stocks in the market. So sort of that 50% order, the same as the market. So looking at Argo, actually, did I say they invested in... No, it's actually 90s. The 90s they started this particular fund. So they've been running for quite some time, and trying to replicate the market by the look of it, but failing to do so through this period here where they just went sideways for a long time.
So let's get into another question on the thing. We've got a lot of stocks to cover tonight, which is really, really good. Okay. Maman's asking about TWE and Coles, but actually we haven't looked at Coles for a while, so how about we look at that as well?
Oh, TWE or Coles? Which one?
Let's look at Coles. We haven't looked at that for a while. So he's going, hi Dale, and hi everybody, hope everyone had a lovely weekend. Yes, Dale and Janine, can you give me thoughts on Treasury Wines and Coles, please? So let's have a look at Coles.
Okay, now the interesting thing about Coles Group is the fact that it traded down initially after listing, but then it's just gone gangbusters after that. And we know that Wesfarmers, it actually demerged out of Wesfarmers, and we know that Wesfarmers has actually done really well also. And it's quite normal often for a stock that's demerged to actually follow in the shadow of its former company. So you look at stocks that have been floated out of BHP, for instance, you can see that at times there were similar moves on those shares.
Yeah, BSL, what was the other one?
S32.
S32 and One Steel. We're all sort of floating.
They don't always follow exactly, but there are just periods of time where they do. So at the moment, Coles is obviously playing its cards right and is hitting some good numbers, but this reversal here this month is a bit of a telltale sign we could see a short-term pullback on the share, but nothing to be too concerned about at the moment anyway.
I know I did a whole analysis of this for our students way back in sort of May or June. I spent ages on this stock saying, let's look at this stock and watch it. And we put a lot of analysis on it saying that it'll be a good buy back then. So I know a lot of our students have made about 30% on this stock at the moment.
Look, there's not a lot of data on it, so it's not easy to put analysis on a share like this and to make it accurate. But you can. There are some short-term types of analysis that you can apply to stocks where you don't have a lot of history that can help you work through that. But generally, we wouldn't generally recommend or talk about these type of shares because they don't have the history.
No, they don't have a history, and that's why I brought it up with our students to give them the insights on how you analyse it. So we started right back on bar one and started looking at the stock from bar one, bringing up 1 week and one month at a time, and talking through what I would be thinking, how I'd be looking at it, how I'd understand.
So that's module 2 sort of thinking, isn't it?
No, it was actually even more than that. It was more going through all sorts of things, but some of the stuff was module 2 stuff, what we're doing in module 2, and some of the stuff we talk about in the Trading Mentor course, our beginner course.
Right.
So they would have understood some of that, but as it got more progressively on in time, then we could add a lot more rules around things, a lot more techniques around it. So it was just a progression for these for our students to say, well, how do you start looking at a stock that's just floated on the market?
I guess it makes it simpler from the point of view that there's not much data to analyse.
No, there's a lot less rubbish you have to get out of your head. It's just there. It's just raw and it's nice and easy. So let's now look at CSL for Patriot One, and I'll find his question. It'll be here somewhere. I'm not sure. Here it is. Hi, Dale and Janine. What's your I'm assuming thoughts regarding CSL's price drop today? Will it keep dropping?
Yeah, look, I actually see downside for CSL in the short term. I think we could see something in the order of, from the high, let's see, it could come back about 10%. We could even see it come back as far as 15 over time. However, right now there's no reason to be looking to get out of it on the weekly chart if you're trading this and trying to get a good capital growth out of it medium to longer term, so that all the bars are green still, even though we've got this week down. Earlier,
one day doesn't make a sheep station, does it? It's like one day down's irrelevant to us. It's, and people say that all the time. It's like, well, wow, a stock fell 3 or 5%. We go, yeah, big deal. Come back next month and let me know what's happened, because people make reactive decisions. CSL is one of the best performing stocks on our market over the last decade, like Cochlear, so this is a brilliant stock. So I wouldn't worry about one day, Maddie. Right now it's bullish. Simple.
Now, just on that for Ross Lane, Alibaba, just briefly.
Yeah.
You've looked at Alibaba, haven't you? You did a whole story on that at some stage.
I quite often look at, obviously with my US reports, I look at US stocks. So if you want me to look at US stocks, you need to put the comments on my US report. Don't put Australian stocks on my US report. So, and I do. Like this week, I looked at retail stocks. I looked at Macy's. I looked at Target. I looked at Coles, Coles like Coles. It was Kohls.
Yep.
And the fourth one was, I can't remember the fourth one. My producer might yell at me if he remembers, but there was 4 of them I looked at. It was TK Maxx was the other one. So the TK Maxx stores that are out there. So TK Maxx and Target are doing really well in online space, but Amazon's not doing as well. It made 19% this year.
So have you looked at Alibaba? Or?
Not for a little while, but if you put the question up there, I might look at it for you, Ross. But you need to put the question on the chat.
Oh, telling me has to.
Yeah, and I'll look at Alibaba for you. How's that? So we've got another stock now. So we've done CSL. Look at Tom. We look at CBA. So some big stocks tonight.
That's fantastic. I think it's starting to get through. CBA I really like. At the moment it's starting to pull back. We haven't really seen any reason to get out of it. And as you can see, a big sideways move has unfolded. It did come back and fill a gap on the weekly chart. This was back in August 2019. But if our market does fall away, then you'd expect that big stocks like Commonwealth Bank, Westpac, all the BHPs, Rios, that they will come back some way to varying degrees. But at the moment, you can see here on the monthly chart, a very important observation to make. If you're getting nervous about a stock ever, just go to the monthly chart and have a look at where it is in the big picture sense. So you can see here that really it's not a move to be concerned about it in any degree. And looking at the support across here, we can see incredible support around that 76.60 level. So I'd say if Commonwealth Bank pushes back up and trades above around 82.43, that we could see it heading towards that all-time high that occurred here in March 2015. And look, Commonwealth Bank is actually due to break through that level. It's been taking an incredibly long time to get through that high, hasn't it?
Yeah, very, very much so. It has been struggling. But all banks, all those big four banks have been struggling since March, April 2015. So, and you can see that they're not going down much. You know, they all fell maybe 25, 30-ish%, but not much, which means the market doesn't want them to go down too far. So the big end of
well,
town...
they've recovered. It's particularly CBA's recovered a lot of that, what it lost. I mean, Westpac, if I can just bring up quickly
you can
chart
do that.
of
I'm
Westpac.
sure they'll let you do that, Westpac.
Well, you need to have a look at that, yeah. I mean, that's a different story altogether, isn't it? I mean, at one stage we did like Macquarie, Westpac and CBA, but right now you wouldn't even, you just put Westpac in your watch list, in another watch list, not to look at it for a while, because that's just going to take a long time to turn around and produce any sort of decent signal there.
Oh, absolutely, you are. So, you know,
but Commonwealth Bank's different story. You know, more monies might flow into Commonwealth Bank as a result of Westpac being down like that.
Yeah, I think probably the I suppose the prime takeaway from today is just an opportunity to pick up. If, let's say, the market goes down tomorrow or next couple of days, because I did say in my report that I expect the market to go down for 1 to 2, 1 week or in next week, or either this week or next week was going to go down. So this could all just be happening. We could get a down week this week and then up again through to Christmas and into February, March. So that's probably what could be happening. But these down moves are an opportunity.
Retail numbers will have a reasonable impact on all of that. So if from this Black Friday they see really good results on the credit cards.
Well, they've already had them. If you watch my report,
have
so
they
you haven't
come out?
seen my
I haven't
report,
seen
have
this report
you?
this week.
Yeah, well, watch my.
So what is it? Because some of the people on this show won't have seen that
No,
either.
they've got to watch the video.
Oh, okay.
They've got to watch the video.
So they've tallied all the numbers, is what you're saying, and now I've got to go and watch the report.
Yep. Jim and I talked about it a hell of a lot, Black Friday and everything else, and we talked a lot about stuff like that. So they go and watch the video that's out today.
Because look, I'm really interested in the whole weekend, because
then you watch
not
the
just
video.
not just the Friday, because I can remember seeing so many people driving into the shopping centre on Saturday and Sunday. Just didn't stop.
Yeah, but not in America. A little bit different in America.
Yeah.
Now we've got a question. I don't want to look at the stock, so we've got a question. This was emailed in late. So if you're going to email us a question, make sure you get it to us by sort of 3 or 4 o'clock in the afternoon today, not at 5 o'clock, but that's just a little bit of a hint. We've got a question from, and I don't know who it's from here, I'm reading it. I have no idea what your name is because it hasn't got your name on it, so sorry about that. Hello, I've started watching your show. Thanks for watching the show and love your long view approach. Thank you very much. I have a question about the linear price scale you use on your charts, please. What advantage does it give you over log scale, or is it just personal preference? Thanks for a great show. Do you want to answer that?
I haven't used logs for a long time, so I it's not something that I would even think about using. I think that when I first started charting, I looked at log scales, and the main thing that I use the log scale for is just so that I could see the whole history of the share. Because, and particularly when we were looking at the market, so you can appreciate that when the data that we've got on the All Ordinaries Index, we've actually combined from data that we've given right back to, what was it, early 1900s.
Well, we don't show that on here, but we've got data back to 1875 and about 1900 on the Dow, I think.
Yeah, and so you can't actually make sense. You can imagine it, you're looking at a chart of Commonwealth Bank and you can see, if we just look at that chart briefly, that's a huge amount of data rising all the way from the low down here in October 92 all the way up to, say it's close to $100 nearly. That's a big range to try to fit all onto one chart. So you can imagine the market itself, all the way from some very small amount to highs that we're dealing with now, and the markets keep going higher. The log scales actually allow you to fit the whole chart on the screen, and it doesn't look distorted. So that's why I like the log charts. But when just looking at a stock to analyse or to do back testing and analysis on, I would never use a log scale. I'd just use a standard scale.
Yeah, and the thing is, it's like, if we brought up the chart of the Dow right now, we do have the Dow back to 1900.
Yeah.
But if we did that on a monthly chart, you'd have all the first 50 years just flatlining pretty much, and that's really what Janine's talking about there. So, but obviously we look at a little bit more recent history when we're trading. But yeah, it doesn't change our analysis at all, does it?
No.
It doesn't really change anything at all. So, but great question. I'm glad you're thinking about that anyway. So let's look at another stock. Now we've got Adrian who's asking about CKF.
Collins,
we already covered CKF, did we? Oh, sorry. We did.
Yep.
Oh, okay,
Next.
so we're not doing CKF. There's one from Christopher. He's on EML, and it's down the bottom. I saw it. He says, "Hi, Dale and Janine, first time live, so fantastic. That's why I'm putting you up your question. So welcome to the live channel meeting. I hope you enjoyed your first time. I purchased your book recently and broke one of the rules today.
He's honest.
Well, he is honest. He broke one of the rules. You don't break rules. I bought EML for $4.50 and would like your opinion on the future of this share. So EML.
Okay, $4.50 puts it up here. And not knowing why he bought and what rules, I mean, I can see that there was a potential entry here, but this is the challenge with when you don't understand how to set really sound rules yet on stocks. You might find that you're actually getting in on what you think is a rule to enter, but it may actually be a subsequent rule down the track. So numerous rules may have already triggered along the way, and it may be just another potential opportunity right before a high, for example. So looking at this share, it could continue to rise. It's on a bullish run, but eventually these sorts of rises peter out because they just run out of the buyers for them because the price just escalates so fast. So and then you get the short-term profit takers coming in, and if the volumes are low, then the short-term profit takers can really punish the share price. So right now, if I'd bought the stock, then I wouldn't be selling it because it's not going down. I'd be wanting to set a reasonably tight stop loss on it though, but I'd be using technical analysis to do it, not just a price level.
Yeah, but for him, he's just bought our book, so he's only new. So
you could get a trend line. You could try to apply trend lines up under the stock and wait till you get a trend line underneath it. You may not be able to get one up under this acceleration but eventually you'll get a third point for it.
At least if he keeps his 15% stop loss on his buy price, that's going to limit any loss that you might have should it fall away. Right now, it still looks all right. I wouldn't have bought it today. I wouldn't have done that, but that's okay. That's your choice. But make sure you do have a stop loss on the stock to protect capital in case.
So it's 20% down to this level. 450 is a bit lower than that though. So say if you pull that down.
Yeah.
Oh, I can't quite grab that. But you know what I mean. It's
Yeah, so just set your stop loss, matey. Just keep that on there, 15% below your buy price, as I talk about in the book, and make sure that you do enact that. We're not saying the stock's going down. It does look bullish, but if it goes down for 1 or 2 weeks, it might concern you a little bit, and that's really where people get emotional, especially those new to investing and trading. You know, they stand there and they look at the stock the next day. They buy it and then they look at it every second for the next few hours, and then every day they look at the stock market and see what happened with their stock the day before, and they either have a good or bad day depending on what the stock did the day before. And so really just pull it back, put your stop loss on and sit tight at the moment. If it falls away, you know how to exit. If it goes up, you'll make some money. So let's have a look at another stock. Now we'll go to, we've got Z1P, so Zip for BL, for somebody BL.
Zipco?
Z1P.
Yep. So Zipco actually had a huge reversal here. We can see that how the range of the bar actually encapsulates the previous bar. Now, that's a bearish sign, and then the stock's still falling away. Now, looking at this, there's huge support underneath here at about $3. Right now, I'm not liking this share at all, given the reversal that we've seen on it. So, you know, I'd be saying that it's a volatile stock.
They just said
that's the challenge with it, isn't it?
They said they've raised 60 million in an oversubscribed placement this week. That really means nothing.
Yeah, but what the placements do is it tends to drive the share price lower, and so that can be the challenge. So temporarily the share price may fall away, but to me that's no ordinary pullback. It's not. No. You know, normally when you see a placement, you do see a sell-off, and it can be months and months before the share price recovers from that, because whoever was going to purchase the stock online, they've now purchased it offline.
Yeah,
you know,
but it depends on who the placement. If it's an institutional placement or a retail placement, that also changes.
That's a good point too. But you know, if it's an institutional placement on a stock like this, you wouldn't think it would be, because you know that they would totally dominate it.
So that brings the question.
Do they sell it before they take up the placement? Is that what you're saying?
Well, part of do they sell it before they take up the placement, or if it is a retail placement, not an institutional, why is it retail and not institutional?
Look, it amuses me sometimes when they offer it to the institutions and they don't offer it to retail investors.
Because
I
they know
think
they can get the better price and get it done quickly.
I think it should be done across the board. But the challenge is often for these companies is the cost of being able to offer it to retail investors. It's massive to manage that process.
Yeah, correct, and that's why they do it. So therefore, you'd have to wonder why if it is a retail placement, and I didn't look, so I can't tell you. If it is a retail placement, why did they do that? Did they think the institutions wouldn't have bought it?
Yeah.
So that's also a question. But right now, we wouldn't be looking at buying it. It's pretty much as simple as that.
It's not liquid.
It's not liquid. It's not. Well, it's going down at 2. So let's get on to the next one. Is APT, Afterpay for Matt. Now Matt's going, thoughts on Afterpay. I owned it back in October 2018 and exited in September 2019. Looking at maybe entering once it picks up again.
Okay, so he's entered on the bull bar, but just so happens it was right before the
he
outside
sold
reversal.
it on September. He bought it last year in October.
Yeah, so he sold it on this bar here, and he's bought it last year in October.
Yep, so he's made good money.
So he's made good money, but whether he used good rules in terms of the exit strategy or not, because, you know, in terms of seeing where the exit is, how would you get an exit there? There isn't one.
No, not necessarily, no, but that's okay. He's obviously done some rules and he's made some money, but you know, from that point of view, where are we seeing it going right now? Would you be
You might be able to get a trend line up underneath there, though. You just have to have a good look and see if you can fit the trend line up underneath it.
Yeah, but right now, I think we need to see where it's going and its downward move. Now, obviously, the current bar, the last bar on that weekly chart on the right, is just yesterday and today. So we'd like to see what happens this week to see whether it holds up. So if it does hold up above that prior major low, then, you know, it could be starting to move up again. But all stocks move up and down. And
so what you're saying is if it goes above here, it's more likely to rise? It's
more likely to rise and make a new all-time high. But if it keeps falling below roughly where your pointer is, then it's likely to keep falling away.
Okay.
And so right now it's in that point of don't do anything. You just sit on your hands, and this is where too many traders jump. They think, and you get people that aren't great traders. They want to short stocks that are bullish, and then they want to go long stocks on the bearish.
Okay.
So it's have you ever tried to stop a bear that's charging at you?
I've never seen one that close.
Well, if I see a bear running for me, I ain't going anywhere. I'm gone. Yeah, that's it. All I've got to do is run fast.
I can just imagine you screaming.
Yeah, no, all I've got to do is run faster than you. And we'll get there. But that's what people try and do. And I'm not saying this person's trying to do that. I'm just saying now it's a wait and see game. And until it picks a direction, and right now it's still a bit undecided where the direction's up or down. And so once it picks the direction, you'll know what to do. If you're not in it, don't buy it. If it starts moving up, then it could be a good buy from there.
Okay.
So let's have a look at the next one. It's on some Cordy. It's called VHT.
Volpara. Okay, interesting. Looking at the bigger picture, it has been really bullish lately, but slowed down. Look at the sideways move essentially that's happened from April 2019. It's tried to move higher, made a new all-time high, but then pulled back. So we can see here a gap there on the weekly chart. It's come back and filled it. It's really just coming back to test the support, really, I think, from the buyers at around these levels. If you've got good rules on the stock, then you wouldn't be concerned about it right now, but it may look at the angle, Dale, that it's run up. You know, it's really nice to see some of these ones here, and I've got a trend line arrow there. I'll put a trend line up here, but we can see there is a nice little move up there underneath all those lows there. If that is the looking at it, it's a nice trend really, but it's just the reversal that's happened recently that's broken that potential move. So we could see a move back below that trend line in the short term. If it starts to pull back up and rises above this November 29 November 2019 high, about $1.95, then it's more likely to make new highs. But at the moment, that trend line's being tested, isn't it?
It is being tested. So, well, that's our last stock tonight. How's that? Okay. It just went so fast. But if you're watching this show and you're watching the recording of it, you're watching after the live show, like tonight or over the next week or two, remember the chat's just down the bottom for you rather than being a live chat. It's a comment section. So please, love you to play some comments. If you like the show, tell us. If you'd like us to look at stocks, if you've got questions, put them down there. Because I also look at that comment section for comments for us to answer questions for Janine and I to answer on the live show for the next week. So if you have been watching it or you are watching the recording of this, please type down below. Remember to hit the like when you type, so type that like and then subscribe. That's what you got to do, and we'll look after you from there and answer all your questions. But we hope you've enjoyed tonight's show, because as you can tell, Janine and I have had a lot of fun doing it, and hope you've come along with a fun ride with us. And if you'd like to see the show go, remember to share it on your social media, your Twitter, your Instagram, your all the other things. And if you don't know how to do it, ask your kids to do it for you from that point of view. But we'd love to get the show growing further.
Also, make sure that you put this show into your calendar so that you're back online next Tuesday at 7 p.m. If you cannot be with us live next week, we're always happy to receive your questions, so send them to info@wealthwithin.com.au and just type Wealth Within Live in the subject line.
Okay, Janine, well, that really does bring us to the end of the show again, and I'm really sad. I really enjoyed tonight. I wish we could go on for hours and hours, but I'm sure they enjoyed it as much as we have. Thanks for taking part. We'll see you again next Tuesday at 7 p.m. But for now, goodbye, good luck, and good trading.
Good night, everyone.